everybody. It's Michael here from the Trading Institutional Order Flow thread on Forex Factory. I hope you're all well. It's the 20th of May 2019, and we're going to do some market analysis. For those of you who are roundtable members, you know we went through quite a few markets yesterday in our usual Sunday meeting. Um, this is more for our YouTube group family. So let's get into the charts and see what the markets are giving us. So here we are. We're going to start as usual with the US dollar. We're going to go monthly, weekly, daily. Let's do the monthly first so I can show you the big picture of that. So we'll go to the monthly. So here we are with the US dollar. As you can see, the US dollar continues to grind higher. We're working our way through this demand zone right now, coming through there. So that's where we're at. The prices are reacting from. It's a slow move up, but so far so good. Prices continue to rise. We're looking towards this area up here um, as a potential challenge. The trend is up now, and we've got an obstacle here. So if we look at that movement closer on a weekly chart, we take a closer look. We can see the move on the weekly chart as it continues to grind up and move up slowly and just keep going ever so slightly higher and higher. For the supply zones above current price, that's what we've got sitting right above us, and ultimately we have that gap as well above. The demand zone that's holding price, like we've talked about before, the demand zone holding price is that one. So we still got a little bit of room to go. Buying the US dollar now, if one is not already long, is a little bit of a challenge. So bear that in mind. We still have room to go though. So looking at the dollar-based pairs, there may still be opportunities in some of them um, as well. So that's what we've got on the weekly. Those are the levels that are in play right now. And on the daily, a more granular view, we can see the daily chart has gone flat inside here with demand zones being removed, lower ones being respected, supply zones being respected. So this is the area that prices are stuck in right now. That's the supply over there, and that's the demand down in there. So right now it's up into this range, not the greatest place to be looking for buying opportunities. We now have new demand coming up into these levels right there. There's a new demand zone right there that you can see as well that's just formed. So if we base here and we may punch through, if we do fall back down, here will be an opportunity to buy. Let's take a look above us and see what we've got in terms of levels. So is this level still on? That level's been breached. So the next level we're looking at, if we blow it up, let's blow it up a little bit. So the next level we're looking at is up in here. I mean, we could just use both candles. If we want to be a bit more precise, then we would go up there. So those are the levels. There's a little one here as well. So those are the levels currently above current price that we're looking at. You can see where those levels come in above 98.87 to 99.27, and you also have 99.62 to 99.86, 87-ish up there. So those are the levels we're watching now for the US dollar. It's caught in a range, having trying to break out of these highs. You can see the formation up here. It's trying to break above these highs, trying to hold above those, and we'll see if it can do that. Prices have broken out, they've pulled back, and they're going again. So it's still looking fairly bullish. Demand zones being created as we go up. Now the euro, which is the opposite in terms of markets to the US dollar, for those of you who may not be aware, they are inversely correlated usually. Now we know correlations don't always work. Um, so that's the supply on the euro monthly that's in play right now. and that's the demand below. So we are still a bit of a ways away from where the big buyers are sitting on the monthly, and we've had these areas play out already. We now have a new level formed up there. So right now the trend is down. We still have room to go on the big picture. Watch this area for over the next 2 or 3 months as well. See if we form another level here. It's still moving away from it. We may even form one here if it drops. If it rallies up, I think you will find the sellers will try to step in somewhere in here as well for now. Whether it'll hold, we'll have to wait and see. Now looking at it on the Euro US dollar, we have the weekly chart there. Prices are working off of that supply. Let's see what we have in terms of demand below. So if I'm going to be quite tight with it, I would put it like that. If I wanted to give it a bit more room, you would do that, but that's really not the way I would draw my zones. I would probably go more like that. So again, we still have a bit of room to go either way, depending on how we draw it. A bit more room or a bit less, depending on if you put it there. So still have room to drop. And ultimately, we have the gap trap, not the gap itself, right there as a demand zone down there. So we're looking to see now as we go. We still the first challenge for anyone who's short is to break these lows. 110.97 to break that low. That's what we need to see first. If we start breaking higher, then we'll have the challenge into this area again and see if we can get higher. By that time, we're probably going to have new demand zones form, and then we can look to buy pullbacks to those. But for now, it's clear that we have a downtrend in place. So that's the euro on the weekly. For the short-term income traders, for our short-term income traders, let's take a look on the daily. As you can see, it's gone pretty flat in here as well. We have that supply has been removed, so the fresh supply we've got above us is there. We're holding this gap area now as demand, so we're coming down into it. The market is flat in here, so again, the opposite of the US dollar. If we break higher in the US and we go down, we may be left with supply here. Let's look at where anything below us that's close. I'm gonna put a line across. Then we can go take a look to the left and see what we come up with. So there's two demand zones right below us. There's that one and that one. Obviously, we have that gap as well below price. If prices continue to fall, these would be the areas to look for either bounces or to take some money off the table if you're already short. So for now, this is what we have. The buyers in the short term will be looking down in here and the sellers up in there. All right, so that's the euro. Let's take a look at the Aussie. So for the Aussie again, let's just take a quick peek at the monthly. The Aussie has suffered a little bit of late with the down move that's happened so far in the month of May. It's a little bit messy up here. This is the supply zone that's currently working and holding prices down. We've broken below these lows, the 68.27 lows. We've punctured through it. If we now get a close below it, you can see the 67.445 is below that. If we get a close below it, that's going to attract a lot more selling, and we have room to go to the downside. The trend is down. We may have sellers up in here if we get a push enough down below 67.44. We may get sellers in here. So for now, it's looking still like the bears are in control of that market. Now looking at the Aussie on the weekly, we're forming, or should we say from last week, we have formed that level right there. We formed that level there from last week. It's gapped up this week. You can see the gap. Let's see if we can get it into this area. and maybe we'll look for selling opportunities there. This is a big wick. I don't know if you all have this on your brokers. Oanda has this big level. I haven't noticed it on the FXCM one, but I'll check again. But here we have it. Let's see what's below that level in terms of levels again. Let's put the line and let's go to the left so we can see we have the demand. Let's just blow it up so we can see that area closer. So we have the drop base rally there. So something like that. That's the demand that's below current price on the Aussie. You can see how far away it still is. If we continue to go down, selling rallies is still the higher probability trade, at least on this time frame. So let's go take a look on the daily. And on the daily, we can see the gap up much, much clearer. And we have price gapping into that supply. And you can see the reaction already so far. We gapped up. We gapped right up into supply. I hope some of you are already in this. I know some of the guys on the round table are um, gapped into supply, and we have room to go to demand below. It's so far back, I'm not even going to bother to go look for this. We're going to have to look below this wick and to the left to go look for any quality demand zone there. So let's see how this holds up. For now, it's working so far for the people who are short, whether you took it as short-term income trade, looking at levels when prices were up at 69.27, or you're looking to get in, there will be other opportunities as this develops. And if it punctures through, then we can shift our focus a little bit to um, either potential counter trend longs or even looking to short this higher around this area. Okay, so that's the Aussie monthly, weekly, daily. And let's look at the pound. So the pound is a bit of a mess. It's a bit of a mess. There aren't any really clear levels. This is what we have below us. It's been tested. It's come up into this area. Not really a clear level in there, but with all the geopolitical news that's been happening around this market, it's not surprising that it's not really done anything. The general, tide is to the downside, but we're trying to base in this area. We've taken out supply. We've gone higher. We've gone to the levels of around the levels just pre-Brexit, and we're back down again with the move now coming down again, and all the geopolitical worries about whether we will get a withdrawal plan or we're going to change prime minister. All of these things are all in play for the pound, so it's a bit challenging to make really any long-term decisions unless you have a really strong conviction that you know what's going to happen with Brexit negotiations and all of that. So for now, the pound seems to be better as a short-term trading vehicle with all the volatility that we get with every announcement that comes out around Brexit. So looking on the weekly chart, we're still working our way through that demand on the weekly. We've come up into supply up in here, um, and that's tested, try to come up to it a second time. We could even argue that we've now created a new level of supply here from last week's fall. So we'll see where we get this week. Note that there will be some demand in here that's still yet to be fully broken. So ideally, we'd like to see prices come a little bit further down, make this zone even better as a potential shorting opportunity. But you can see how flat this market has gone. So if you're selling up in these areas and looking for buys down in this area, you wouldn't be doing anything wrong because that market hasn't really done anything since August last year. It's just gone flat. You can see the general direction there. It's not really done anything. So selling high, buying low has been the way to play it so far. And we can see that more clearly when we go to the daily. And you can see the downdraft that we've had in the daily from last week's selling. We have supply created now. We don't really have any demand in here is the issue. So you might have to wait for new ones to form if you are going to try and take longs in this market. For now, it's getting a bit rich, getting a bit extended. This is with the big move we had last week coming off of the supply zone up in here. And I know some of the guys got this as well. We keep a watch on these markets quite a lot. There are supply zones above us, as we said, a day trading vehicle for sure. There are supply zones being created there, and you can look to the left for demand. The next, I suppose, fresh demand is not till 122.13 ish area. So there's still room for this market to whip around quite a lot, go up, go down, all in that range. But those are the levels we would be watching in the pound. All right. I'm going to jump ahead. Actually, you know what? Let's do the New Zealand for our New Zealand friends. I was just going to go to gold and oil and wrap it up, but let's do it while we're here. So, New Zealand, we have that demand still holding prices up, and the supply, we have that level, which has not quite been reached. We've broken through that supply, so you're bound to find, and you can see that we did find buyers in through here. They just haven't been able to hold prices up um, as much as they would like so far. So we'll see how we get on with prices coming down. For now, selling is still the trade that's paying out the most if you're holding it for a long term. It's gone flat a lot since 2015. It's not really done anything again similar to the market we just saw. So it's not really done anything since 2015 on the monthly chart. So watching that, there's demand on the monthly down in here, and we'll see how that pans out. We'll see how all of that pans out. Okay, for those of us who still look at patterns, I mean, don't quote me, I'm not a pattern expert. I know we all learned it when we started learning how to trade the markets with technical analysis. You could argue that that is left shoulder, that is a head. I hope I'm getting this right. I'm sure you guys will correct me if you watch it. As I said, I'm not an expert in this type. I know it quite well, but I can't say I'm a practitioner of chart patterns. But you could see head, left shoulder, right shoulder, and we have the neckline about there. We broke it, we've retested the neckline, and we're going down. So using supply and demand levels, we could have gotten in up in here. Um, on the monthly. That's a long term trade if you're using the monthly chart. Now looking at the weekly chart of it, we have tested levels, tested levels, tested levels, tested levels, tested levels. So that's what we've got. Lots of gaps in here, and it's still holding down. It's still holding down. We have supply close by, the nearest supply. This area is a bit. Watch the gap. Watch the gap. I like the fact that there's a gap here, but that there's also supply, more supply behind it. So watch that as this market develops. Any rallies up into those areas may be worth looking at to see if we can join the downdraft, if that's going to continue into this demand zone in here, where we may then take the foot off the pedal, so to speak. Then looking at the daily chart, we have some supply there. Let's take a look at what we have in terms of demand below. Nothing fresh here. I see a level of demand in here that's been tested, not too badly, and all of that sort of area. It's not the greatest here. It's quite wicky in there, so that's what we've got. It's not a market that I would be enamored to trade, but those are the levels we have. All right, so I'm going to go to the US dollar. Full disclosure, I've been in a long trade in the US dollar for some time now. I'm still in it. We're managing the trade. That's been going on. That's based off of that dollar analysis I just shared with you guys, and I'll show you the trade when we get to the lower time frames. But you can see this market continues to rise, just like the dollar that we were talking about with the talks around the trade deal between Canada and the US and Mexico now as well. All of those things are coming into play. It's stalling out here now. So it's a question of, is this market going to stall out here and just push through into supply, or are we going to stall out and fall? So far going with the trend is paying off. There was demand in here that you can see is what has also contributed in holding price up. Not just did it hold there, also forming that level there is still holding and still going up. So we have supply here, we have supply above us as well. That's been marginally tested. So there are headwinds above, for sure. But if this is going to be an area of basing and then we go up, then we will have buyers who will be ready to protect the ongoing uptrend. If we start to roll over, then obviously we will know why that the market is beginning to react off of these supply zones and act accordingly. Um, so that's the weekly view. So I'll show you on the daily. So I've been long from this demand zone. I got in here in February and I'm still holding part of the position now. So I've taken some off when we had the initial pop, and now I'm just riding the rest to see how far we get. All right, so that's the US dollar Canadian. In terms of this one, we have to get through this area. It's a big, big, ugly area, and you can see that's where the markets have been struggling. And we're just waiting to see how we get on here. As we said, it's basing here. Will it base and break out? Will it brace and break? Will it base and break down? So we'll see. For now, the demand zone that is still in control is that one. All right. Good. Let's go US dollar Swiss. And then we will go to the monthly chart to start. As you can see, this is a really flat market. If you wanted to go all the way to the left, that's the supply that's holding everything down, and around there is the demand that's holding everything up. So we're pretty flat. We're closer to the top now than we are to the bottom, so not the greatest place to be looking for buys if we're in the long term. Remember, this is a monthly chart. So if we're going to go up, we're going to go up and push through this area. Then we can start looking for pullbacks to buy. For now, it's at least on this time frame, it's not one to be taking positions in for the way that I trade. Um, so we're watching a base happen. Were we going to base and break out or base and break down again? So it's one to watch. Nothing quite yet to do on this time frame. Let's go to the weekly chart. So looking at the weekly chart, we are, as you can see, that basing now quite clearly with more information. We really haven't done anything for several years now. For 4 to 5 years, we haven't really done anything. We've just gone back. So let's take a look at what's above, what's been above that's been holding prices down. It's there. What's been below that's been holding prices up is there. So that's our range that we're looking at. As I said, we're closer to the top of the range, so not the greatest time to be looking for longs there up in here. But as we pull back, at least for bounces, we've got that demand and that demand. The problem with these are, number one, if we are going to just react off of the top of this big range we've looked at, and then going to make sure that we come down, these areas are going to fail. They're going to fail because they're right up in the upper half of this range, because we prices have a long way to travel down. You see? So if we are going to break out though, we're going to have these areas begin to hold. So that's the trade-off that you have, the decision you have to make. Do you think we're going to have a breakout? In which case, you'd be looking to buy down in here and hold. If you do get a hold on a 4-hour chart or a daily chart, and see if you how high you can get, or you can just take it for the short-term bounce and get out with your profit and wait to see what happens and then try to re-enter later. Um, but definitely not areas to be going short. The time to go short was up in here. Okay, there's still a bit of room to go down to those levels for sure. So we'll take a look on the daily, see if we see anything. On the daily right now, not quite. That area would have been a bit aggressive. It's a possible short, but it would have been maybe on a smaller time frame, like a day trade. It's really nothing clean above. Let me just look. Yeah, there's nothing clean above that whole area up there. There's nothing clean up here. It's tested into that demand, went up and then fell. So it's a lot of trading in there, but nothing clean here for on this time frame. Maybe on for those of you that trade intraday. Now looking at these areas, they're all tests into each other. Again, nothing clean. Looking at that area maybe worth considering. Yeah. So that's what we've got for the US dollar Swiss. Let's do gold, shall we? Oh no, we can't skip the US dollar Japanese. Let's do that one. Sorry. Let's do that one. And again, we see a very flat market. Let's go for that. Flat market on the monthly. That's the demand that it's been for years now. 2016, and that's the supply. And that one ultimately, that area is being used as supply. It's not one we would classify as supply per se, but it's being used by the market to keep prices down and in this range for now. That's more the kind of supply zone that we would look at. So the weekly is going to show us a more detailed picture of the sideways range we're in, and you can see that just visually. Again, we have demand in here. We've tested it first time, second time in. We made a higher high when we tested it the first time, but we've now made a lower low as we've come in. So again, it looks like it's forming a sideways range, even in a sideways range. So we're getting a bit quieter. The volatility is going out of the market. So be watchful of this market. It could explode anytime soon as it's going quiet now. Yeah, so that's what we've got for now on the weekly chart. So these are the levels to play off of. Definitely not in an area to be selling aggressively now. And on the daily, that's the demand we have below us and the supply we have above us. There's a little bit of supply here, but I like the gap more. This one's a little bit in the middle of the move, so this looking higher might be better risk to reward. It will be actually. So those are the levels that I would be keeping an eye on for myself. And looking at the gold market, I'm sure some of you trade gold. We trade gold a lot in the round table. We have some big gold traders in our group. Um, so that's the supply on the monthly chart that is yet to be removed. We have fresh demand down in here, and that's the demand that is holding prices at the moment. Yeah, that's what we've got. That's what we've got. So again, nothing. We talked about this on the roundtable when prices were in here, and some of us really shorted it up in here because it was not the place to be looking for long trades. You've hit, a level that's yet to be broken for several years since 2013, and unless we again try to start going up, but the initial reaction tends to be down. The thing I noticed though is we haven't had huge selling. We've had a pullback, but not really big candles like we see here. Although you'll notice the first 3 or 4 months up in here as well, we didn't really have a lot of selling, and then the selling came in. So it's still possible for the selling to appear and we go down, but I'm just wondering whether with the amount of time spent here and what's happening with the equity markets and the world economies, that people may now be buying protection, looking at gold, and as the bond markets are also going up, which is another market that we're long. Um, and looking at Brent crude oil. Oops, no, my bad. I need to go back to that weekly, don't I? Let's take a look at the weekly on gold. Um, so supply already in play. We have demand still fresh below and more demand fresh below. And we'll see how we get on. This is the pull back. You can see the areas that have been taken out and the demand now. The areas that have been removed, and where people are beginning, every rally now is being sold. We are at an inflection point right now. We'll see what happens. If we come down, then we may be left with supply up here, and we're looking for demand into these levels here. Okay, so this is the weekly view. So right now, for me, the way I trade, probably nothing to do right now in gold. Just actually watching to see what happens here. And you can see that move down clearer on the daily chart. The fresh demand, we have some demand in here, like I was talking about last night, and that's the supply that's still in place. So it looks like this market again has gone flat in here, with supply zones being removed and demand zones now being created. Whether the demand will hold now is wait to see. The fresh demand is below us there, and fresh supply is above us there. So we'll see. We'll see what happens. Okay, so that's gold on the daily. All right, and now Brent, crude oil. Let's take a look at crude oil on the monthly. So crude oil on the monthly chart, um, we have demand that's still there, and we're coming up into supply now. You could actually put it all like that. We'll wait to see what happens now in the market as the markets come up into this level. Um, we took out a lot of buying that happened in here, really deep correction into this level. You could argue the whole thing goes all the way down to here. Um, and we've now come back up. So is it possible that Brent or crude oil will go into some sort of range between these two levels? It's definitely possible. And I'll be looking and watching for that. Obviously, if we don't, then we'll be getting through here, so that will be obvious when it happens as well. So we'll see what happens. And looking at it on the weekly chart, that's what we've got. Supply up there, which hasn't been reached yet. We've now got demand there, and we're in an uptrend. So we're coming up into supply levels in an uptrend up here. So we'll see how those play out. But those are the levels we'll be keeping an eye out for um, medium-term income on that one. And then looking at the daily chart for the shorter term income traders, again, we hit supply in this level, and we're coming back up now after falling down. Did we make it below this level? I think we did on my chart. Let me just blow that up and take a look. Just about. We'll see. What level was that? 69.20. So yeah, so we just about saved that zone. So we'll see. Let me just take this off. Will this come off? Will it come off? Yes. Okay, so that area there, and we're trying to come up again, removing supply, trying to make a turn in here on the daily on Brent. So this area is a challenge, but the fact that we're basing here makes me wonder whether we're not going to take that area out and maybe just go up to the higher one and then get a pullback to any demand that's been created here. So watch for that. Watch for that. So that's what we've got on the daily. That's still looking bullish on the weekly, on the daily. The monthly is what is, if you're a position trader, not the place to be entering right now to go long. All right, I will take a look at copper. For those of you who trade copper, copper is supposedly one to watch with all the trade talks, with China being a big player in the copper market. for use as well. So let's try looking at this market. So we'll see. We don't really have much in the way of clean levels. Demand is there. Supply is, whew, any supply we're going to look at is going to have to be up there. We still have to get through this area though. We still haven't managed to get through all of that area. So it's not really doing anything or showing us much on the monthly, but those are the levels. And also on the weekly, let's take a look. Actually, we can open it from there. On the weekly, we have demand way down here. This is years away. Well, I say years, it could be there down in there in a few months. And the supply that's holding prices are there. Not great, nothing really happening here, going flat in here, spinning its wheels, waiting for Mr. Trump, the Chinese premier, to decide which way they want to go, and then we'll probably see a big move in copper. But for now, it's not the greatest market to trade. There are better metal markets out there. And on the daily for short-term income, we are sitting into demand right now, trying to battle against the sellers up here. We're back down into the demand, so probably best to watch and see if there will be buying opportunities that come up if you're looking for the counter trend trade. All right. So that's a lot of markets, a lot of charts. I hope you guys found it useful. Again, thank you all for continuing to share your thoughts on the Forex Factory thread. If you wanted to follow me, this is the way. I post often on the institutional order flow thread on forexfactory.com. I'm on Twitter, Facebook, stock tweets. I do look at stock charts as well with supply and demand. I post some of them on the thread there as well. And if you are interested in coming on board the roundtable, then just hit me up at storehouseanalytics@gmail.com and I'll send you the information on how to become a member. If you just wanted to do the roundtable, which is a monthly subscription, or if you wanted to come on a one-to-one course with me, or just buy the tutorial videos, there are several choices you can make. Okay. Thank you, everybody. I hope to speak to you all again soon. I think we've done enough to keep you guys busy for a little while. Take care now. Bye for now.